Hi, my name is Lauren. I am a fractional CFO and owner at FP&A4U.com. My mission is to provide decision clarity for small businesses using financial planning and analysis, FP&A. Now, I want to clarify what a fractional CFO does. A lot of my clients don't even know what FP&A is. So basically, your CFO uses their crystal ball with their spreadsheets and projects where you are going in the future. So, different than your bookkeeper. Let me clarify that real quick. Your bookkeeper is in the daily transactions. So, they are managing your accounts receivable, accounts payable, payroll, your close, your reconciliation process. And for those of you that don't know, after the last day of the month, that's when your close calendar kicks off. And your bookkeeper should be reconciling all of your bank statements to your books to make sure what's in QuickBooks is really what happened in the bank. And there's usually a standard cutoff, according to your company policy, somewhere around the 7th day to the 14th day of the month. Now, what we do as a CFO is create a strategy for where you want to go. And it is the precursor is having really clean books. So your CFO should be working or monitoring your data integrity. As far as the process, the first step is to cast a vision. So I meet with you and I discuss, where do you want to be in 1 year, in 3 years, in 10 years? And really, I want to know not only in your business, but in your life. Because in a small business, your personal life is greatly impacted by your business. So do you want to grow? Do you want to scale? Or do you want to maintain and increase your work-life balance, maybe have more hours with your family? All of that comes into play in your strategy. Then we create a strategy and budget. They say the best way to build a house is to build it twice. First, you create a blueprint. That's building the house the first time. And then you actually build the house. So the budget is the same thing. You're creating a blueprint and targets to get you to your goal. Now, usually your budget is an annual process and it stays fixed. Once you set your goals, you usually don't change your budget. Now, your budget means nothing if you're not reviewing. Same thing with exercise and diet. Unless you are super motivated, it is hard to stay on track with your nutrition. One day you may eat really well. You might actually go for a whole week, and then you eat a whole pack of Oreos. If you have a coach that holds you accountable and reviews your diet, then you are more likely to stick to the plan. That's the idea between a monthly cadence, a monthly review process. What we do is we take your P&L and your balance sheet, what actually happened, and we review against your budget. It's called a budget variance. And we see, okay, we hit our targets, we didn't hit our targets. This is how we need to pivot. We also look at your cash flow forecast. And I do want to take a minute to describe the difference between a cash flow forecast and a regular forecast in a minute. We also look at your expense review. Sometimes there are unplanned expenses. Sometimes, just like your diet, you binge a tray of Oreos and you have to pivot the rest of the month. So that's what your monthly review, P&L review looks like. Let me catch my breath. Okay. A forecast and a cash flow forecast. Some of you may know what revenue recognition is. That is based on whether you are a cash accounting or accrual accounting policy. you recognize your revenue on your P&L differently. So let's use accrual accounting. Let's see, how do I want to explain this? Let me use an example. I'm going to create a fake company in my mind real quick. A wedding industry. Let's say that you own a wedding company, pretty similar to maybe a construction company or something that's long-term with revenue that's collected throughout a long period of time. So for a wedding company, it's a very seasonal business. Let's say that this company has $1 million revenue in a year, but weddings, let's say $500,000 in weddings occurs in spring and $500,000 in weddings occurs in fall. And then based on your company's policy, the money is collected at different time frames. So couples usually book out weddings a year in advance, but you collect 50% upfront. So your forecast is similar to your budget, where it is projecting the profitability for the year or period of time you're looking in. So let's say in January, you're heavy on sales because people get engaged in Christmas and New Year's, and it's a very lovey-dovey time. So you have high sales. So your forecast would basically be the same concept as your budget, where you are seeing, let's say that you had a goal to sell $300,000 of weddings in January, because that's peak sales, but you didn't hit that target. Let's say you hit 200,000. Your budget stays fixed. It is written in stone. Usually at a corporate environment, your budget is approved by a board of directors, and your shareholders, your shareholders may be entitled to know some of your budget information, so it's fixed. Your forecast can fluctuate and pivot based on new information, like we only hit $200,000 in revenue goals compared to our target of $300,000. A forecast is similar to a budget in that you change your inputs and you say, okay, now in February, we need to make up that $100,000 in sales by offering a sale, creating a marketing campaign, training our sales team to cross-sell XYZ packages or add-ons. How are we going to make up that revenue? It is a constant pivoting budget or target. That's a better way to say it. Now, the cash flow forecast is a different report. Now, let me take a minute. I get so excited. It's like a workout doing this video. Okay, a cash flow forecast helps you manage the money in your accounts so that you have money at all times. So for the wedding business, $500,000 is collected a year in advance. That's your 50% deposit. And we're going to assume that's a non-refundable deposit, so you can use that money right away. If it's a refundable deposit, then you actually have to hold on to it as a liability, and that requires different planning. But we're assuming that $500,000 was collected a year ago, and you spent that money. You don't have a cash flow forecast. So you've kind of just been spending willy-nilly. Now it's March, and you have all of these weddings that are actually taking place, and you need to pay all of your vendors, your photographers, the bouquet lady, whatever it is. And you are now in a little bit of a panic because you don't know if you have enough money in your bank account from the money that you've already collected to pay these vendors. A cash flow forecast will solve that problem for you. So especially with seasonal businesses, it will show you when you receive the $500,000, how much you need to hold, and when $300,000 for your contractors or whatever COGS is going out needs to flow out of your bank account. So it is just a timing tool. And it is the number one thing, the first thing that we provide when you hire us, because it just helps you sleep better at night, knowing that you have enough money for payroll. And you can't outsell your problem. So in the wedding scenario, it would be easy to say, okay, we need to sell another XYZ number of weddings so that we have enough money. But that is unpredictable. It would be better to hold on to your cash and plan it out based on your cadence. So that's a little free tip there on forecasts and cash flow forecasts. There are a number of analyses that your CFO can provide. Really, the goal is whatever is holding you back in your business, whether like something that's giving you analysis paralysis, whether it's, can I open a new location? Will I get my money back if I spend a large chunk of money, your ROI? Should I put my money in a mutual fund or buy this equipment and start a new line of business? Can I hire someone? Should they be a 1099 employee or a W-2 employee? Do I have enough money saved away for taxes? Am I saving a little bit with my tax strategy? All of these things are great questions for your CFO. And I hope that you, that's me, drop us a line. Reach out. This is an email, or schedule a free 30-minute consultation. So I hope to hear from you. Thanks.